You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back after a bit of a hiatus. We were off here for the newly official Juneteenth holiday here in the U.S., so we were off on Monday. So for the Option Block, we've been gone for a little bit, gone for about a week, but now we're back in your ear holes talking about all the fun stuff going on in the world of options. My name is Mark Longo from theoptionsinsider.com. Reminding you, of course, if you're one of our many on-demand listeners, again, coming off the hottest month in the history of the network, so a lot of you are out there binging on all different platforms. If you're on the on-demand side, all we ask is that you keep rating and reviewing. Clearly, it has an impact. Clearly, it helps new people discover the content, and they need a guiding light these days. So you could be that guiding light. Give them a review over there. Hopefully, if you like it, 5 stars. If you don't, maybe you want to knock it down to 4 stars for the Rock Lobster. I understand. He's controversial. And, of course, if you want to go above and beyond, join us Tuesdays and Fridays for extremely awesome additional content, as well as giveaways throughout the week, as well as live access to whatever shows float your fancy, whatever your schedule allows. You know where to go. theoptionsinsider.com/pro is the place to go. And let's see who's joining us on the old program today. First, let's go out to the quiet, sleepy hinterlands of Chicago. We are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here in the hinterlands, and happy to report it's a lot cooler today than it was a couple days ago.
Yeah, we've
had
been
some hot weather out here.
We've been flirting with 100. You know, it's bad when the relatives in Florida are texting you to tell you, hey, it's hotter where you are than by us. So never a good thing here in the Chi-Town lands. I don't know if it gets that hot where he is. Let's go out now to the shores of Maine. He has that ocean breeze. I mean, it is dark and stormy all the time, but one of the upsides is you got that ocean breeze coming in all the time. That's where we are joined by the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. Does it get up to the triple-digit level temperatures over there on the shores of Maine?
It never gets that cold. I'm sorry, warm.
Wow.
I mean, it probably, I would say, like when it's in the 80s, it's pretty warm here. So in the summertime, yeah, it could get to the 80s. I mean, maybe some places inland, like in the high mountains and stuff, can get into the 90s. But I don't think I can't remember a time when it got to 100.
There you go. The dark and stormy shores are good for something. Let's see if we're good for something. Let's break down a little bit of the old market action. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block, the portion of the show where we break down what the heck is trading. By the way, if I sound a little bit under the weather, it's kind of because I am kind of dragging a little bit right now. So bear with me here on the shows here. By the end of TWIFO today, I should be feeling just amazing. So I have to conserve a little bit of my energy for that as well. Let's get into what's lighting it up on the markets today. And it's a kind of a bit of a mixed day. We've had a couple of days now. This is day 2 of Powell, talking the market up and back down and all the way in the middle. So whenever the Fed speaks, the market's going to kind of keep its powder dry and wait and see. And so we got the Dow right now off 0.4%, S&P off about 0.2%, NASDAQ actually up, bucking the trend, up about 0.25%. That means all of our vol products are pretty much down. Again, we're not going back to Monday's show. We're going back to last week. So VIX a little bit shy of the 30 handle now, 29.5, down about 3.25. VVIX, again, back below the triple-digit level, 99.5 when we kicked off the show. That puts it down 13.5 points from where it was this time last week. VXX, 2360, that puts it down almost 2 points, 1.9 points from Thursday's show. Again, not Monday, but Thursday's show. UVXY, 15, down 2 points from Thursday's show. SVIX, 10.25. That's actually up. Again, that's the inverse product, so that makes sense. Up 0.75 point from Thursday's show. UVIX, 18, down 4 from our last episode. And Vol Q, a.k.a. the NASDAQ Vol, at about a 33.33. That's down nearly 4 points, about 3.7 points from where we were on Monday. Let's go around the horn the opposite of the way we came. Let's start with the dark and stormy shores of Maine. Mr. Rock Lobster, sir, what is lighting up your tape on this kind of mixed Fed day, sir?
Anybody find it odd oil stocks are getting crushed today?
Oil, nat gas, they came for all of it over the last week. It's been interesting to watch. We had Dan the Man Gramza on our Pro Q&A on Tuesday, and he was as befuddled as anyone as to why they're coming for nat gas, but oil falls into that same category. They're coming for both of them. It's just too high, sir. That's what it is. They're being nice to us.
I mean, so literally the Russians said, hey, we're going to cut off 40% of the gas to Europe. And every major oil and gas producer listed in the U.S. is like down 10% from that announcement. Where do you go with that? So
we're planning opposite day in the energy markets.
Yeah, it is really odd. And plus the fact that they're doing this to the Europeans, and the SPX is down. It was up today, almost up percent, and is now down like 0.17%. Just, dude, this is weird action. So, maybe it is the Fed getting out of the market, which I think overall is good. Let everybody digest the news. But oil stocks, so they're now below, the level pre-Russian invasion, like most of them. Exxon, all the energy limited partnerships that move oil around. I'm looking at Oxy right now. Oxy's down a bunch, actually. That stock was $74. Now it's $55. It is basically back to March. It is every oil stock is back to pre-invasion levels. So I don't know. Is this Putin selling his oil stocks? Like he's just getting out of the Russian position? I don't know. I find it really odd. And of course, the market is having, a little bit of a digestive issue with raising rates. Now, I think the fact that they raised them and trying to cool things off because inflation is so high is a good idea. Like it has to be done. The rates were too low for too long. But the market can't decide to sell off anymore, which I find interesting as well. So it's kind of I don't know. I'm curious to see what TOSAW has to say, but it feels like a day of like conundrums, that. And the other thing I'm watching is like Chinese equities seem to be making a little bounce from their, they've kind of been doing the stair step back, but they seem to be making a little bounce as well. So we'll see if they can get to some of their recent highs, but they are making a little bounce as of today.
A day of conundrums indeed. Let's go out to Uncle Mike. He's always a good guy to talk to on a day of conundrums. He can talk us off the ledge, talk things up, make it just feel better about ourselves. Uncle Mike, sir, what is lighting up your tape on this aforementioned day of conundrums?
There's plenty of reason to panic. We're all going to die. I couldn't resist. All right. So in looking at the markets today, just the markets are doing what they're doing when our beloved elected officials are just trying to put Mr. Powell in the hot seat and get their airtime themselves. Some of the questions are, I've watched some of it today, and there was just one senator that is just, I felt, or one, I don't know if he was a senator or a representative, but he just appeared to where he was looking to get attention for himself and not necessarily get to what the root issue of his question or the problem was. And it just looked like he was trying to get airtime to show how he was being tough on the Fed. And I don't even know what the Fed had to say about it because the guy kept interrupting Chairman Powell. And so I'm just shocked that one of our elected officials would act like that. So I think that when you get something like this, most of the day of what's going to be said is going to be posturing for the camera by our elected officials and not necessarily looking to get to the bottom of this, to question the Fed. It just seems to me it's an opportunity for people to get on TV and do what they want to do to help their reelection. I know that's shocking with our elected officials on both sides of the aisle. But you do occasionally get something. You do usually get something that's going to drive the market in one way, shape, or form. And the problem is just during the day, the market doesn't always react to it the way that it is eventually going to react to it. Like there's a lot of times when Fed rates come out. If you'd think the market is going to go up, it goes down. That's the first reaction, and then it goes higher. And a lot of people say the first reaction is the wrong one. That may or may not be true. I've never really studied it that much, but in the years of watching these hearings and Fed chairs testifying before Congress, one thing that I know that I can tell you from what I've seen is that you get a lot of movement during the day that might not be the movement that you're going to get once the market digests what it needs to digest. So in other words, the market needs to take a full picture of everything that has been said today. Like I said, I believe that a vast majority of the words that come out during these hearings are going to be just political posturing. But if you're really looking to trade off of it, you got to pay close attention to the words that can drive the market. And when you do that, you got to be sure that you're not acting too soon, because a lot of times the first move is the wrong move, whatever the case may be. So that's kind of what I'm seeing and going over with the Fed at this point in time. We've bounced off our lows last week in the S&P 500. We got to a low last week on the 17th or Friday of 36.36. We're at 37.55 right now. So we're definitely off of those lows. And we appear to be forming another magnet around the 3,700 mark, kind of, at least over the course of the last week or so, or the last 10 days or so. Before we had a little bit of a magnet forming around the 4,000, 4,100 mark. Now we've moved down to the 3,700 mark with the S&P. And so on it, what I think is interesting about it is that this is a lot tougher of a level of support just because of the close of 2020 / open of 2021 levels were around that. So we do have that key number along with it showing some actual support with where it is right now. And so on here, I think that where do we go from here? If we do have another couple hundred points to the downside, I could see a lot more coming because there's really not a lot of support levels below that. Right now, what's going to drive the market up? Is it going to be earnings? No, because there's no earnings coming, or we're not in earnings season. But what could? Well, I think a couple of things could drive the stock market up. I think that we've bounced off of these 3,700 levels, or we've kind of tested them, I guess would be a better way of describing it. And that could be a reason with which the market could come up. The other reason with which the market could come up is that all these inflation fears aren't going to be as bad as we initially thought that they were, which just as a an American who buys groceries and gasoline, I really do hope inflation goes down. But I'm not convinced that I don't know if inflation has peaked, but I personally feel we're closer to the top with inflation than we are to the bottom. That's for sure. That's another thing that could drive this market up, would be the inflation peaking, as well as the fact that we've tested the lows around the 3,700 level. Another thing with which we have that I'm finding pretty interesting throughout all this is that 10-year note, it went up to roughly 3.5% on the yield. Last couple of days, we've had quite the rally in it, not on the yield, but on the note itself. We've had a lot of buyers of the 10-year note. Like I've said before, whenever we have both stocks and bonds going down or going up, money's going to appear somewhere. So in other words, we've had both stocks and bonds go down so much this year that money will appear somewhere. The fact that I'm just looking at IEF, it's gone from a high, we began the year at roughly 115 on the year with IEF. It tracks 7 to 10 year U.S. government treasuries. And the fact that we were at the 115 level to begin the year, and the fact that on June 14th, we got down to 97.99, that's a very significant drop in the 10-year note, or in this case, the 7 to 10 year U.S. treasuries. That is very significant. Now, what's that on? Is it on just this rush to get into the stock market? Well, obviously not. The stock market's down over 20% on the year. Is it because of the fact that we're having rising interest rates? I don't think it is, because we've only raised rates twice this year. What I think has driven down bonds as much as they've been driven down this year are two things. Number one, the anticipation of rising interest rates. And number two, inflation fears. Think about it for a second. If you want to be in a bond, an instrument that pays what was a 2% yield, would you want to be in it if we have 4 to 7% inflation? Do you want to be in something that's paying 3%, which is what it is right now, at least in the 10-year, when inflation is going up at over 7%? And most people would say no to that. Now, let's say that we do get inflation under control. Let's say that we then may or may not have to raise interest rates as much as a lot of people think we might. Well, then that could be cause for bonds to rally as well. I know it's rather odd, but there are times when stocks and bonds act alongside each other, meaning they both go down or they both go up at the same time. And that's been the case this year. Bonds have gone down, stocks have gone down. A lot of times you have an inverse relationship, but right now with the stocks going down, threats of inflation, concerns of higher interest rates, that's one of those times when both things will go down at the same time. Now, the other part to that, can they go up at the same time? What if inflation fears cease a little bit and the Fed doesn't raise rates, or at least they're perceived that they won't raise rates? That could be a reason to be bullish in the bond market. And in terms of stocks, well, let's face it, we're down over 20% from our highs. This could be the dip to buy. I'm not sure, but I'll give you my 50% guarantee that it may or may not be. And with that, I'll turn it back to our fearless host, the sexiest man in options, Mark Longo.
Yes, I'm just dripping with the sex appeal today. But you're right. You know, some of our contributors have been hitting us up, calling out the bottom there. I know Mr. Oracle, New Hampshire, Mr. Matt, he wrote to me, said he thought this was a bottom this week. I know Andrew's been kind of leaning along those lines of things being oversold for a bit. Russell Rose told us a couple of weeks ago he was all in back when I think we got to around the 38.5 or 3,800 level, something around there. So yeah, a lot of people are starting to dip their toes in these waters. In fact, that is what our question of the week is right now, listeners. We're asking you, a lot of you said in our poll a couple of weeks ago, if we broke 37.50 or hit 37.50, over 40% of you said you were going to start buying at that level. So we're asking you now, are you doing that, or are you waiting for lower levels? Gave you three choices. You're back in, you're waiting for lower levels, or you never got out. We'll get the results a little bit later on in the show. That's at options, where you can play along, listeners. You know what's not playing along right now? It's just the markets. Like I said, people are keeping their powder dry on Fed days. There is a whole heck of a lot of nothing going up out there today. VIX right now, brace yourselves, 114,000 contracts, listeners. So Yeah, that's a whole heck of a lot of nothing. The ADV is down to 505, so threatening to break 500,000 again. SPY, a little bit better, 3.06 million. It's not quite as far away from its ADV. The ADV out there about 7.25 million. The S, over 1 million contracts, so that's not nothing there. 1.12 to be precise. The ADV, 2.25 million. So S, looking interestingly robust on an otherwise quiet day. That's kind of interesting. IWM, 230,000 contracts, so not a lot going on in small caps right now. If you want a little bit more small caps, we'll be hitting those a little bit later on the show. On TWIFO, got Carly Garner joining us again, so that should be fun. She's always fun to talk about commodities, energy, a whole bunch of fun stuff. She loves her crazy ladders to the upside and nat gas and beans and all these crazy products. So we'll see if she has any more of those on. Let's go out to the Qs, 1.17 million on the tape right now. The ADV, 2.61. Let's go out to the single names. Let's see if it's an active day. It's not really lighting it up, but number 10 on our top 10, I think will raise some eyebrows or perhaps please some folks. This is Vroom, VRM, a.k.a. Vroom Inc. We talked about this a few times on our Options Oddities program. There were some pretty juicy puts, I believe, back when it was trading around $3 and change. People were interested in those 2.5 puts. I think a few of you out there in the listening audience sold them. The stock right now, it got a lot lower. It is trading right now, having a good day, up 30 cents, back up to about $1.50. It got to as low as $1.03 not too long ago. When did it hit that? It might have hit that. I hit that back on, it's like June 16th, sometime around that level. So, yeah, things that actually June 13th, yeah. So things were looking kind of rough for Vroom, but now the stock getting a bit of a lift. I'm not sure what's driving it out here. Is it an over? Someone changing a rating? Is it a buyout type of talk? I don't know what it is, but Vroom looking robust and also making it into our top 10 for perhaps the first time ever. 183,000 contracts on the tape for number 10. Again, that's not a lot, but that's actually decent compared to what we've seen in some other recent days. Number 9, we've got the old F, a.k.a. Ford. Trading right now, 11.31, off about 1.5% today. $1.90 on the tape. So decent bit of action for Ford. Ford's kind of been all over the place of late. I know it's been attracting a lot of you at some of these lower levels. Not too long ago, it was trading $14, and not that long before that, back towards the latter portion of last year, it hit its high of 25.87. So 11.32, a far cry from that. Good for 190,000 contracts. Number 8, we've got NEO, our old friend NEO. Don't even need to look up what's going on in NEO. It's a day that ends in Y, so something's happening out there in NEO. 222,000 contracts. Good for number 8. Let's go out to number 7. Mr. Rock Lobster said he thought maybe the Chinese names were stealing a bit of a march today. That appears to be the case for number 7. It's Baba. 258,000 contracts on the tape. It's good for trading right around 109 right now, actually, up 382, so about 3.6%. So a nice little lift for them today. They got as high earlier in the session of 112.70. So nice little lift for Baba and a decent amount of options paper as well, 258,000. Number 6, NVIDIA, 273,000. We won't bother with them as well. They're always in the top 10. Number 5, it's Meta. They're kind of frequent offenders these days as well. Trading right now, 156. Let's see. Yeah, so kind of unched. They got as high as 159 today. They are off. They actually had a range of, looks like about 154.25 and a high of 159.29. So my goodness, over a 5-point range on the day. So that explains the options activity. Right now, they are almost literally unched. So settling out right in the middle there. But Meta having a little bit of action today. 392,000 contracts. It's a pretty robust day for Meta. Number 4, it's kind of just glued there. It doesn't matter what's going on. AMD is going to be holding down the number 4 spot, probably. 445,000 contracts. Number 3, the Amazonians are back, once again proving that splits are good for business, at least from a volume perspective. 110.25 right now, up about $1.30 or about 1.2%. Let's see. They got as low as 107.93 and as high as about a 111.83. So nearly a 4-point range out there in Amazon as well. Good for 655,000 contracts. And the number 3 spot, number 2, it's Apple. What's up with Apple today? Let's see. 136.5, up about $1.20 right now. It got as high as 138.25 today, and it started off at 135.63. So quite the interesting run out there for Apple as well. Let's see, good for 740,000 contracts. Again, that's kind of light for Apple, but It is a Fed day. People are usually keeping their powder dry on days like today. That means number one, the big dog, back in the top spot again. It's been a little while. It's Tesla. 1.01 million contracts on the tape. What's going on with the Musk drama engine du jour? Trading 689.35 right now, down 19 handles or about 2.7%. Had a range of about 718 on the upside and 687.5 on the downside. So that's AKA another day that ends in Y in Tesla land. This thing likes to move. Good for 1.01 million contracts today. Earnings front, not a heck of a lot lighting it up out there, as you might imagine. We're kind of in the dregs. That said, there are some names still set to pop off this week. We had Leonard Holmes and Lazy Boy on Tuesday. Wednesday, KB Homes. I love how all the similar names tend to line up around each other. Today, we have Rite Aid, Darden Restaurants, and FedEx. In fact, we had Darden before the bell today. Let's go out there and see what's popping off in Darden. We have the latest earnings move and results reports for you. You guys check them out for yourselves. TheOptionsInsider.com. Completely free, as always. The stock, let's see, 115.12 is where it was going into its announcement. It was pricing in 5.7%. It delivered 0.2%. So a whole heck of a lot of nothing. Wow. Let's see where Darden's is hanging out right now. It is hanging out about 115. So it's pretty much unched still. So, wow. If you were selling that juicy nearly 6% premium out there, you're looking all right, at least right now. Let's see. Coming up after the bell today, we have FedEx. 229 is where they were trading. They were pricing in $14.42. In the past, they've moved $15.36. Now, you notice how I switched from percent to dollars. We have a listener question about that a little bit later. I should say an outraged comment about that. So I will come back to that a little bit later in the show. But yes, past earnings moved $15.36. And right now they're pricing in $14.42, so a little bit less, as you can see out there. Let's hit Nike really quickly as well. They're coming up next week. They're trading about 105 right now. They're pricing in $7.6. In the past, they've moved $6.15. So there you go. We find it's easier for you folks to digest it when we put it in dollar terms. I'm just going to throw that out there right now. On the season, you know the deal was. The season, at least as ORATS tracks it, is over. 83% is the average. And that's where we're hanging out right now. Still tracking 92 long straddles, 42 short straddles, and 95 long calendars on the earnings trades report. Again, all of that updated for you, hot off the presses right before showtime. You can check it out for yourselves. TheOptionsInsider.com. Meanwhile, it's time for us to keep on rolling into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Let's see what the Eye of Sauron has found for us today. Let's look at first Redfin. Haven't been out here in a while. This is, of course, the online real estate brokerage firm. Let's see. Ticker symbol RDFN. Trading right now, 873. Rough year for them. Let's start on the day. Today, they're up about almost half a buck or about 5%. So nice little lift today. But again, kind of a blood red year for them. A year ago, they were trading $60.28. That's a lot higher. They got up to as high as about 65.41. Looks like that was on June 25th, sometime around that range. And ever since then, listeners, it's been just a slow, inevitable erosion of premium here all the way down to where it is right now. The 52-week low was actually $7.13. Looks like they hit that back on the 15th. And now, to their credit, they have rebounded quite a bit, up about $1.60 from those lows. Let's see what our Eye of Sauron has found out here. This is a good one. Yeah, one of these ones where they don't really feel like giving you a market. So the market they disseminated was no bid at $2 for these Jan 2024. So we're going out a ways. 3 strike puts. Redfin trading 876. The 3 handle puts traded this morning 6,730 times for a whopping 95 cents. So pretty much almost exactly splitting the uprights out there. Let's see, the stock was pretty much exactly here. So the stock has not changed. Obviously, there's earnings between now and Jan of 2024. The next announcement is on August 4th. Mr. Rock Lobster, this is one of those just kind of FU markets. No bid at $2. They traded for 95 cents. What do you think they did out here? I think they sold them. I think they bought them. And what are your thoughts on this trade, sir?
As I recall, we were not allowed to disseminate a no bid at $2.
Yeah, wouldn't that have been nice?
I mean, that's definitely a market I could get behind. I'd be generous. I'd even go teeny bit at $2.
Yes, exactly.
I'd go out there. But now we
the
realize
freedom.
Why Ken Griffin has $29 billion in a $1 billion real estate portfolio, because he can get away with no bid at $2. So as far as this trade goes, I guess they found something in the middle that looked reasonable. Redfin has had a tough year, like all the other real estates. That I think Open Door is another one, OPEN, I believe.
At least these guys didn't algorithmically buy like half of the real estate market in the Pacific Northwest, right? And then just get run over on it.
Right, and then lose, by the way. So in a year where we had 2 years of almost double-digit increases.
I don't know what that algorithm was buying, but man, that was terrible.
It did not work very well. Because I did see some buying paper in Open before as well. So that was call paper, but I know it's kind of in a similar. It is in a similar industry, right? So this was a $40 stock. It is no longer a $40 stock. It has been. I hate to say Kathy Wooded, but they've just hatcheted just about every stock that has great growth prospects, but not a lot of revenue. This one in the middle is kind of hard, though, I have to say, Mr. Mark. This is not a layup on the volume train on this particular option contract. Like, did they buy them? Did they sell them? Not easy. Like, if I'm trading this in 2024, like, are you really buying the 3 put? For 95 cents in January 2024. I think that would probably be better as giving you a return on your money. Like that would give you about a 33% return for a year and a half hold. That's not bad by selling those puts and then taking the stock. So I think if I was buying Redfin, instead of buying Redfin, I'd just sell those puts and be happy and get the stock at $2. So I think if it's a customer, I can't see how they're like, if they're buying them for what, unless they just have some, ridiculous exposure to credit for the company or something like that. That's a disaster. But I think a lot of the paper in these types of stocks, I've noticed, because I was looking on Tuesday for big money flow. There's a lot of call buyers in Open as well. So I think somebody is kind of like trolling around the bottom a little bit for, they're trolling around the bottom for a little bit of action, I think, in these companies. So that's what I would guess from just what the paper is. I don't see why you'd bother to pay 95 cents for that, but that's something that we could keep an eye on. I was looking too from a vol point of view. So they're saying that the volatility is up. However, the January 24 3 puts are 50 cents at 95 coming out. Now, I don't know about you, but if you're a liquidity provider and, I would guess there's more at 95 if you want them right now. So my guess would that would be a customer seller when you look at the resulting market right now.
I would hope so. If you're paying 95 cents for these, what are you doing? On the flip side, that could be a CDS writer. They could just be, paying these to lock in whatever disgustingly exorbitant premium they got to sell a CDS on Redfins. That certainly could be the case. So it's a win-win for them. But yeah, if you're selling these, I mean, 95 cents, I don't like, you know me, I don't like going out that far, listeners, but you're collecting nearly $1. You're really only having to, margin $2 worth of risk on this. So it's not really a huge opportunity cost trade, particularly compared to the amount of premium you're bringing in. So from that perspective, it's not the worst. Obviously, Redfin goes the way of the dodo. You'll be wearing it a little bit, but $2 compared to how much the stock has dropped. That's a drop in the bucket, quite literally. Let's go out to another one. This looks like a newcomer here. This is Lightning E-Motors Inc., ticker symbol ZEV. All I have here is that they are out of Loveland, Colorado, obviously an electric vehicle company. Let's see, trading right now, $3.40, up about 30 cents or 9.3%. So a good day for them. On the year, as it would maybe befitting an EV, they've had looks like some tumult. A year ago, they're trading $7.63, so pretty much almost double where they are right now, a little more than double, actually. And then they sold off to about $6.50. Then they shot up on August 10th, so good earnings, good corporate announcement, something along those lines. Shot from $6.41 to $11.60. They actually hit intraday $12.13, so they almost doubled on that day. And that was their high for the year as well, $12.13. They almost immediately gave all that back by August 25th. They're trading $7.44. Then they tried to rally again to September 10th. They got up to $9.93, and that was kind of it. They were pretty much selling off nonstop pretty much the rest of the year. They hit a 3-handle back in May, and they've been kind of languishing around this 3-handle ever since. They actually broke down their low for the year. It's $2.76. They got there on, it's like June 14th. So they have rallied a bit from there. Let's see what our Eye of Sauron found. We've got the AUG 4 $4 calls going up for 26 cents, unlike our other market, which was $2 wide. This one a little bit more reasonable, 20 cents at 35, and they went up for 26 cents. So pretty close to the bid there. That's 95 vol, if you're wondering. The stock was pretty much exactly here, 340 odd when we put these up. And the next earnings are August 12th, which I do believe falls below, or before expiration. Yeah, August expiration is on the 19th, so we're good. That's going to be, there's some earnings juice baked in here as well. Interesting. Selling these for 26 cents. I mean, this stock is pretty beaten up. Its high for the year is $12. But hey, if you're thinking this thing's languishing, you're going to take your 95 vol and get the heck out of Dodge 2,000 times. Mr. Rock Lobster, what are your thoughts on these calls and ZEV? Did they override them? Did they maybe get a stealthy buy? What do you think's going on?
ZEV. I'm going to jump into my ZEV.
Everyone loves ZEV.
It sounds vaguely Russian, like the Lada.
Maybe that's why it sold off for the better part of the last year. I think touching Russia, getting crushed, right?
Except for the Russians. I think was the ruble is the strongest currency.
The ruble's
in 2022. Right. Revenues are historic because they're selling all their gas and oil to India and China instead at the expense of the Europeans. Anyway, but we'll let that sleeping dog, we'll let that dog lie. As far as this one goes, this again, interesting, an interesting name here. Like so many stocks you see, like 2021 was a good year and 2022 is not a good year. Most stocks are down so much. I'd like to say this stock looks different than every other stock. I'm not even sure that this is a net sale on a buy right. Did we get any news from Henry on this one?
Yeah, I'm not sure. That's why
I'm a little ambivalent about. I mean, the only thing is it is leaning closer to the bid by quite a bit. So I'm assuming this is some kind of overwrite, but you're looking at a growth EV stock and you're now selling the call for 26 cents. I think that's a sad state of affairs for the industry.
It's not exciting at all.
Like, everything's going to be $1 trillion company like Tesla, right? Now, folks are writing the 4 calls. The stock is 343.
That's why I kind of hope he's buying these just to kind of keep some bloom on the rose, right?
Yes, but I think, sir, that the bloom is a bit off the rose on this. And I do have something for you, just a little extra thing, I think, that I thought would be interesting.
I love extra. Hit me.
Okay, so a little extra is, you remember you talked about Vroom for paper
Yes.
in the beginning section? So I looked at my my option pit hard to borrow indicator, and for the listeners, for a little color, the yearly cost to borrow right now for Vroom is 50% of the value of the stock on the 57-day option, on the August 19 cycle. So that's a pretty heavy borrow cost, not as expensive as we've seen, but still 50% of the value of the stock is still 50% of the value of the stock. So that's a pretty heavy borrow cost. 56,000 of the July 15 two calls have gone up, and the cage match is between 10 and 15 cents for all of that excitement. The 2.5s in August, 50,000 go up between 10 and 15 cents. This is all new paper. Vroom actually traded as high as like 170. So this is pretty, I would say, this is pretty solid. This is pretty solid squeeze-like paper. The one level put goes up 50,000 times for somewhere between 10 and 15 cents. So I don't know what the heck is going on in this thing, but basically 350,000 lots have gone up. The July 2s, the Aug 2.5s, and the one level. I know the Viceroy is he's twitching in the corner somewhere. But it appears, and this was all done, okay, and with stock. So again, this is a total oddball one. All the paper appears to be opening. But if I had to guess, they're buying the Aug 2.5s, they're selling the July 2s, and they're financing it with a sale on the one put. And this is supposedly against stock. So I don't even know in that room, like, how that trade makes money. I got to think about it for a second, because I don't think it's totally obvious why you would even sell the July 2s. I mean, I could see that, so you can back into the August 2.5s for a quarter, for a nickel, and like maybe trying to, get a credit for the whole thing. Trying to get your 2.5s for free. So just that is the biggest bizarro bunch of paper I've ever seen. So they are in a top 10 for volume today, but 150,000 contracts is just 3 strikes and 3 trades across with stock. So I just wanted to throw that in there for people that follow Vroom. I have a call offer out there to get rid of my stupid calls that I bought. But as of right now, there's no love on the strike quite yet.
Always a good sign when we can't figure out how someone's going to make money on a trade. That's usually a sign of a really well executed, well put together, well thought out trade. But Zoom's been just all over the place. I know some of our listeners, I think, may have some stock now as a result of their put sales. So if you do, maybe today is a decent day for you. Let's go out one more really quickly. Then I want to get Uncle Mike in for his belated strategery block. Let's go out to Revlon. I'll spare you the details. You guys know the story, especially if you've been listening to Options Oddities. We kind of first started talking about this when the stock was back breaking the 2-handle in the other direction. Now it's 712, off 91 cents today. Got as high as 830. Looks like it got up to actually 905 on Wednesday. So it got up to $9 from, I was trading $1 and change like a week ago. So a lot of our listeners are upset that they didn't dive in when we were talking about it on Oddities. Yeah, I think we all kind of missed the boat there. Let's go out. But today we just got, looks like it's kind of pick your poison day. We've got 1,131 of the 5 puts in July going up for 90 cents. These are July 1st. These are the weeklies. Looks like they bought these for 384 vol when the stock was a little bit lower. And at the same time, Mr. Rock Lobster, we got someone coming in and paying through the offer 99 cents for the July 10 calls, 1,285 times. So it's a pick your poison day. These did not go up at the same time. So it's not a funky diagonal strangle. It's just kind of nonsense paper that we expect in a name like Revlon, sir. What say you?
It feels like they could be strangle buyers, buying the 5-10 strangle for
Could be they went up like an hour and a half apart though. So unless maybe they're
right. So or there's this clearly these are different customers that are they're bipolar relationships. So one's buying the 5 puts for almost 90 cents, and one's buying the 10 calls for 99 cents. So I thought Red Ball was going bankrupt. And then they had a squeeze, and the stock went up $9. So it stands to reason it could go back down, all the way back down to zero again. Now that one of the richest men, I believe, didn't he used to, the guy that owns it, Ron Perlman, used to be one of the richest guys in the country, as he's taken his Revlon, like, it's kind of beyond me how they could go bankrupt, but maybe just kept pulling so much money out of the company there wasn't any left. That could be the only thing I can think of, right? Because what's their revenues increase? I don't know. I just assume that they just kept borrowing money against the company until they ran out of money. But this does look like, and this is one of those crazy things where either the call or the put could pay, just depending on how bad the squeeze is and when it's over. So I think that's where they're going with this one. That would be my thought on this particular one.
All right, and we are going into a surprise belated strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, Uncle Mike, we missed you on Monday, so have at it. The floor is yours, and if you don't mind, I'm going to sit down.
Okay, sounds good. All right, so what I want to talk about today is something called sequence of return risk. Now, where I'm going with this is that a lot of people over the last couple of years, maybe you've gotten spoiled, or maybe 2020 hurt you in doing this a little bit. When you're taking money out of your nest egg for retirement, if you take money out at a market trough, if you will, and you're using the market for your retirement, which is fine, a lot of people do that, that can be a pretty big risk. So here's what I mean by that. Let's say that I'm going to use easy numbers right here. Let's say that the market were to go down 50%. That means that the market needs to make a 100% rate of return to get back to where it was in the first place. Difficult to do. So when the market does pull back, you need to be concerned with it. And so the risk of sequence of return risk with which I'm referring means that, let's say that you have to pull out money for income when you're retired, and you do it when the market is at a lower level. Well, if that's the case, that's kind of rough to do, because now the market has to come back at a higher level than it was before in order for you to make up for that. So where I'm going with this is that ideally we all would love, let's say that you take money out of your retirement once a year. If you took your money out on January 1st of this year, then you're in a great spot because you took money out at the all-time high and the market went down. So that's a wonderful thing. But if you're in a spot right now where you need to take money out and then the market does actually come back, it will not come back with the amount of vengeance that you need it to come back because you had to take that money out to live on. So how can you combat sequence of return risk? Well, there's a lot of ways with which to do it, but what I want to talk to you about today is a way with which I think can be a tool in aiding you in that potential problem. And what would that tool be? I know this is going to be shocking coming on this show. Options. So I personally believe that hedged equity is an asset class. I think that you have stock, you have bonds, you have fixed income. You have stocks, you have bonds / fixed income, you have real estate, you have commodities. Those are the four major ones. But the other one that I think is an asset class that also needs to kind of fall in line somewhere kind of in between fixed income and stocks in terms of their risk parameters is hedged equity. So let's say, for example, that markets are getting killed. Well, if markets are getting killed, you do have some money. Even when you are retired, you need to have some market exposure, in my opinion. You need to have much less, but you do still need to have market exposure. And the reason for that is that if you just put everything in a CD, most people aren't going to live long or are going to live long enough to where they still need some appreciation on their money. So you still have that fine line of balance between, do I need to take on more risk or do I need to be more conservative? I mean, there's a lot of 30-year-olds out there that could retire right now if God were to tell them that they're going to die when they're 31. No big deal. But the problem is that if you're like most retired people, you're, let's say, 65, you don't know if you're going to live till you're 75 or you don't know if you're going to live till you're 95. Now, if God were to tell you were going to, when you're 65, you're going to check out when you're 70, well, if that's the case, sequence of return risk really doesn't mean much to you because you just need to plan for 5 more years and you're good. But if God were to tell you that you were going to die when you're 95, well, then you need to be a little bit more risky with your stuff because you got to be on this earth for another 30 years, and that's tough. And so, unfortunately, for this example, God does not tell us how long we're going to live. And so because of that, it's important that when you're taking money out of your retirement nest egg, that you have a plan in some way, shape, or form for sequence of return risk. And that's what I want to emphasize today. Anyway, that is all I have for today. And I'm going to turn it back to our fearless host, Mr. Mark Longo.
All right, I'll get back up to do a little bit more hosting as we keep on rolling. Let's do real quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right. I mentioned at the top of the show our question of the week. We're asking you guys right now, over 40% of you said that you were waiting until the S hit around 37.50 before you're going to begin your BTFD. Now that we've hit that level and indeed broken through it, I'm back hovering around that level, a little bit north of it right now. Are you buying back in or are you waiting for lower levels right now? And right now, 56.5% of you said you're waiting for lower levels. 26.1% saying you're back in. So you did what you said. You're back in now. Or 17.4% said, yeah, I never got out. The latter part of you saddens me a little bit. You know, you listen into a show like this, I want you to be a little bit more active. But hey, you know, I hate to see you guys riding the elevator up and right back down again. But c'est la vie, you're back in. Some folks are joining you now at these levels. Get over there at options. Make your voice heard. You got until the end of the week. Our buddy Age of Delaquaria said he's back in as far as more actively trading, but he definitely never went to cash. I guess he was kind of on the sidelines for a little bit in terms of trading, not as much, but now he's back in with a vengeance. Let's see. We also asked you about crypto. You guys are picked. 73.4% of you chose Bitcoin's going to hit 10,000 before it hits 50K. Only 26.6% saying 50K. So not a lot of crypto hodlers out there in the audience right now, which is interesting. And then we got this, I mentioned earlier, this comment here. This comes in from Brett Liedal. Hope I'm pronouncing that correctly. It says, hey, Mark, thanks for all the great free content. By the way, people love to complain about free content out there. It's free. We love you folks out there. He says, but please, for the love of God and anything holy, please stop quoting earnings in relation to their past moves in dollars. This makes absolutely no sense to compare the dollar value of a straddle to a stock now trading at, say, 100, when the last earnings they may have been trading at 170. Straddles and moves can only somewhat reasonably be compared in percentage terms. You know, if you notice, as I mentioned earlier in the show, what was this, Brett? We switch. In fact, I switched. Different reports use different terminology for that very reason. In fact, all of it behind the scenes, you don't see it all, but all the calculations are done behind the scenes in percent and then converted to dollars. We found that it's just easier for a lot of our listeners to understand when I say, hey, a straddle is $7.76 versus a straddle is, 3.2%. It's like, well, what does that mean intuitively? But if I say $7 is what they're pricing in right now, that's real money. People tend to grok that a little bit easier. In fact, we forwarded your suggestion over to Matt, I knew exactly what he was going to say. He's the keeper of these reports. And he said the same thing. He says, Brett, I hear you, but we do our comparisons in percentage terms first and then convert them to dollars for ease of use. So what's going on behind the scenes, it's all done in percent. And then we just convert them to dollars just to make it a little bit more intelligible for the folks out there. Like I'm looking here right now, we're talking about the results reports. That's pretty much one of the few that still uses percent. That, like we talk about, expected moves of 3.4%. They delivered 5.7%. So that one stays in percent, but pretty much everything else we've converted into dollars. The upcoming earnings reports and all that other fun stuff, all in dollars, because it just makes it easier for people to grok that. So hopefully you can understand that, Brett, and that will quiet your outrage. We love that you're listening. We love everyone. We want your feedback. I'm giving you a hard time. But that's why we do it the way we do, as we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do it. Let's go around the block. Let's start with the rockingest of lobster. Mr. Rock Lobster, we'll do a twofer, in fact. We'll do an around the block as well as what's coming up in your area that folks might be intrigued with, sir. Have at it.
Well, come on over to optionpit.com. I just launched my Spy Master product, and it is showing you how to use SPY and VIX together using VIX as a hedge for your SPY trade. So, although it is closed now, you can't buy it right now because we got enough students to fill the class. So you're out. But maybe in 3 months or so, we'll reopen it again. So it's sold out like with hotcakes and now. Anyway, so that was your shot. And as far as this week goes, I want to see if this oil thing can bounce. That's what I'm looking at.
He wants to see if oil can bounce, and you got to bounce out of there. You can't buy his product yet, but maybe in a few months you can come back and buy it again. Mr. Uncle Mike, sir, what are you watching for the rest of this week until Monday's show, and then where can folks go to learn more?
Watch to see what the reaction of the Fed's going to be tomorrow. Once he's done talking, I'm just curious to see how the market will react to it, both on the stock and bond side of it. And then in terms of if you want to learn more about what I do and where I can do it and whatever, check out my website, stcharleswealth.com, if you're looking for a financial advisor such as myself who delves in the option product. And if you want to follow me on Twitter. I try to put out a lot of content at Mike TOSAW, TOSAW. And check out my YouTube channel. Next week, I'll be back in my cycle of putting out YouTube videos. Just type in St. Charles Wealth Management.
There you go. stcharleswealth.com is the place to go. We got to get on out of here. We'll be back in a little less than a half an hour with Twifo. All you live folks, hang out. We'll pump some fun stuff in there. I'm going to sit down and take a break to rest my voice. These are the days when I'm not feeling 100%, where it's, I love you folks. That's why we put in all the effort for you folks. You'll get your Twifo coming up in about 30 minutes with Carly Garner. Back again tomorrow. Volatility Views, noon central after that for Options Oddities. Then back again on Monday, another episode. The Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.